What if you could invest in the top 30 quality companies in the Nifty 200? Is the UTI Nifty 200 Quality 30 Index Fund the right choice for you? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. But before analyzing whether investing in this fund will be a good fit for investment portfolio or not, let us first understand a few basic details about this NFO. So as an NFO, it starts from 2nd September 2024 and ends on 16 September 2024. And some of the key features of this NFO are: it is an open-ended fund type which has Nifty 200 Quality 30 TRI as its benchmark index. It belongs to the category of equity thematic, and the fund managers for this NFO are Mr. Sharwan Kumar Goyal and Mr. Ayush Jain. And the minimum amount needed to invest in this NFO is just 5,000 rupees, and according to the riskometer, the risk involved in this fund is very high. Now let's take a look at the investment objective. So the primary investment objective of this fund is to provide returns that before expenses closely correspond to the total returns of the securities as represented by the underlying index, subject to tracking error, as this is an index fund. Now as we have taken a look at the for a few basic details about this NFO, now let's take a look at the index it is representing. So Nifty 200 Quality 30 Index includes top 30 companies from its parent Nifty 200 index selected based on their quality scores. The quality score for each company is determined based on return on equity, financial leverage, and earning growth variability analyzed during the previous 5 years. So the weight of the stocks are derived from the quality scores and square root of free float MCAP. The stock weight is capped at 5%. This index can be used for a variety of purposes such as benchmarking, creation of index funds, ETFs, and other structured products. Now let us take a look at the sectors represented under this index. So the sectors represented are information technology, FMCG, consumer durables, capital goods, oil, gas and consumable fuels, automobile and auto components, healthcare, chemicals, textiles, financial services, consumer services, media, entertainment and publication. The highest weightage is given to the IT sector with a weightage of 28.99%, while the lowest weightage is given to the media, entertainment and publication with a weightage of 1.06%. Now let us take a look at the top 10 holdings under this index. So Infosys Limited, ITC Limited, Tata Consultancy Services Limited, HCL Technologies Limited, Coal India Limited, Hindustan Unilever Limited, Asian Paints Limited, Nestle India Limited, Colgate Palmolive India Limited, Britannia Industries Limited. The highest weightage and the first place under this top 10 holdings is given to the 5.59% by Infosys Limited, while the 10th place is given to the Britannia Industries Limited by a weightage of 4.32%. Now if you take the index returns as on July 31st, 2024, till then, in 1 year it has produced a return of 41.47%, while in 5 years it has given a return of 21.88%, and since inception it has given a return of 19.46%. So if you look at the graph you can see that it has consistently performed well in the long run compared to the short dips in the short term period. Now as we have taken a look at the NFO and its basic details and how it briefly works, and also what is the index they represent and some basic details about that, now let's move on to analyzing whether investing in the UTI Nifty 200 Quality 30 Index Fund will be worth it or not by analyzing the pros and cons of investing in this NFO. So first let's take a look at the pros. One of the major advantages is the quality focus portfolio. This fund targets the top 30 companies from the Nifty 200 based on quality metrics. So these are firms with strong financials, low debt and stable earnings, making it a great option for long-term risk-averse investors. And next is the low expense ratio. So this fund comes with a relatively low expense ratio compared to other actively managed funds. So this helps in keeping more of your returns intact. And another major advantage is the passive investing. So, being an index fund, it follows a passive investment strategy, which means it tracks the performance of the Nifty 200 Quality 30 index. This eliminates the need for constant monitoring and reduces the impact of human biases. And another advantage is the diversification across sectors. So, this fund offers exposure to multiple sectors, helping to reduce risk associated with sector specific downturn while maintaining a focus on quality stocks. And finally, the long term growth potential. So, by investing in companies with strong fundamentals, this fund has the potential to deliver solid returns over the long term, especially during market recoveries. So, these are some of the major advantages of investing in the UTI Nifty 200 Quality 30 Index Fund. Now, as we have taken a look at the pros, now let's take a look at the cons. So, but like any investment, it's all not all sunshine and rainbows, right? So, let's talk about the cons first. So, one of the major drawbacks is the limited upside in bull markets. Quality stocks tend to be more stable, which is great during downturns, but it also means they might underperform compared to high growth stocks during bull market. Another point is the concentration risk. Although it's diversified across sectors, the fund is still concentrated in just 30 stocks. So, if a few of these underperform, it could significantly impact your returns. And there is also something to consider, which is the lack of flexibility. Since this is a passive index fund, there is no room for the fund manager to make adjustments based on market conditions. So, if the underlying index underperforms, so will your investment, because this is an index fund where you cannot make the fund allocation dynamically based on the market condition. Even if the market is performing high or low or whatever, you cannot play to its advantage or disadvantage by making the fund allocation dynamically and making decisions based on the market conditions, because this is an index fund which will only try to replicate how the index is performing no matter what is the market condition. So this is the lack of flexibility is a major drawback in an index fund. And this is not ideal for a short term investor as well, because this fund is best suited for long term investors who can ride out market volatility. So if you're looking for quick gains, this might not be the right choice for you, because if you're looking to achieve short term goals through short term investment, this is not the ideal fund for that. And market risk still apply. While this fund focuses on quality, it doesn't completely eliminate market risk. Economic downturn and broader market corrections can still impact the performance of this fund. And especially as an index fund, you cannot make the fund allocation dynamically. You cannot do individual analysis on the underlying stocks in this index, because if you compare it with active funds, they choose and analyze all the stocks and individually and only then choose the best, which is helps them to take calculated risk. But here they only look at the overall performance of the index, which makes it hard for us to take a calculated very proper risk, because here we are only taking a look at the overall performance of the index but not taking the individual analysis of the stocks. So these are some of the major drawbacks of investing in this fund. So in short, if you look at the pros and cons, you can see that UTI Nifty 200 Quality 30 Index Fund offers a solid option for long-term investors who prioritize stability and quality. Its focus on top quality companies, low expense ratio, and passive investment strategy are definite strengths. However, it may underperform in bull market, carry concentration risk, and is ideal for short-term gains. So like all investments, it's essential to align this fund with your financial goals and risk tolerance before choosing to invest in this NFO. So now if you look at the final takeaway from our analysis, it comes of whether you should invest in this fund or not, whether it's worth investing or not. It, as I have already previously mentioned, it completely depends on what kind of investor you are, what is your risk tolerance, what kind of time horizon you have for your investment goals, and what is the asset allocation you want to give these funds to. So it all completely boils down to these factors. But our personal opinion is this might be suitable option for an ultra conservative investor who's not willing to invest in an actively managed funds. But even then, there are similar index funds that have a lower expense ratio and a lower tracking error compared to this fund, which you can invest in rather than this one. Also, if you're willing to take at least a little bit of risk, or if you're an aggressive investor, you can definitely invest in an actively managed fund which have the potential to deliver higher returns than this one. So another thing to consider is if you are an investor who's looking to invest in an investment that can beat the market itself with a dynamic fund management, this is not something like that, because this is an index fund which will only try to replicate the index at best. So it will not try to beat the index itself, and it will only try to replicate the index performance. Those That's why it will not have a dynamic fund management. So if you're looking for factors like that in your investment, it's better if you invest in an actively managed fund compared to an index fund like this. And finally, you should, if you're still struggling to decide whether you should invest in it or not, or what kind of investment will suit your investment portfolio, you can definitely consult with a financial planner. A certified financial planner will be able to give you professional guidance which will make your entire investment journey process hassle free and smooth for you, which will be helpful for you in the long run. So definitely consider consulting with a professional like a financial planner, which can be beneficial for your financial future.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.